Here we go. Hey, people, welcome back to another episode of Wall Street Rundown. Sorry for being late today. I had some technical difficulty, but we managed to make it work, man. Where there's a will, there's a way. But welcome back to another episode, man. Welcome to this Friday. It's like today's the 30th, and I was telling you while I was like, I can't believe January is here. It's over already. That's it just flew by. And boy, was this packed. This month was packed. From political news to trading news to the market moving and all these different things. But man, let's go ahead and explore again, man. I'm your co-host Billy Clement. I got Wale with me. What's good, Wale?
What's up, everyone?
I think I'm lagging a little bit, but
Yeah,
we'll
just a
figure it out,
just
man.
a just a tad bit, but you're good.
Okay. But yeah, man, let's talk about some of these earnings, man. Again, I think one of the things that I mentioned last week was we're probably going to get the new Fed chair nominated sometime this week. And lo and behold, it happened today. And the market did not like that, not one bit. I don't know if it's selling because of that or it's more about people taking profits, especially if you see like gold and silver. We're gonna talk a little bit about that. They got hammered like crazy just today. But before we dive into that, man, we talked a lot about the earnings that's coming up. Apple, AAP, WDC, and SNDK. SanDisk was up pre-market. Some people really made some good money out of it, but if you didn't sell before when the market opened, you definitely lost all your gains. So I hope you took profit. But let's talk a little bit about those earnings, man.
Yeah, so SanDisk, let me just give you guys a rundown. So huge beat, 303.03 billion in revenue, adjusted EPS of $6.20 a share, which was far above what Wall Street expected. Wall Street was expecting EPS of
Easy.
349 and revenue of 2.67 billion. Look at this forecast for their next quarter. 4.4 to 4.8 billion with EPS of 12 to $14 per share, almost doubling or tripling analyst expectations. AI infrastructure demand was what's driving growth. 64% sequential and 76% year over year growth, signaling intense adoption of AI in enterprise SSD deployments. So, man, this company was just running on all cylinders from an operational standpoint. I mean, they hit all metrics. Now, why did the stock sell off? To me, I want to say that it was just profit taking because when you look at the core business and the numbers and the guidance, everything checks out. But if you've been in SanDisk for the last year or two, I mean, call it the last year because they're not even 2 years public. I mean, you at some point you got to start taking, you got to trim something off the table. So I'm
Mhm.
assuming that's
Mhm.
what we saw. I would not be surprised if this stock picks up and starts moving again. But crazy. Now, WDC, the company that they spun out of, that stock was down big
Mhm.
today. They had revenue of 3.02 billion, which is up 25% year over year, so modestly above expectations. EPS was 2.3, that's non-GAAP, which was a solid beat with a year over year growth of 78%, gross margins 46.1%, which is significantly up from last year. So they're showing pricing power. So the numbers were good here, but it says stock dip despite beat. Shares fell between 6 to 11%, signaling that the market was already pricing in strong results. Some see this as a buy the rumor, sell the news opportunity. So they play in the same sandbox, same, hard drive AI space. Why they spun off SanDisk, I don't know. Couldn't tell you. But
Mhm.
from an overall business standpoint, the numbers look good. So um, the thing about the memory market is pricing is going crazy. And I don't know if it's because there's a shortfall of supply or what the heck is going on. But one of the
Mhm.
things I would look into is who are the suppliers to SanDisk and WDC. That's something I
Mhm.
haven't done any research on because I've missed the boat on both of these companies. But I want to see, are there any public entities that are suppliers to these businesses that might also be some gems that we can take a look at? Kind of like how we found TSM after NVIDIA kind of made their run,
Mhm.
something along those lines. And then lastly, Apple. It was a very volatile trading day for Apple, but 143 billion in revenue, which was 16% year over year growth, beat Wall Street consensus. EPS was $2.84 per share, 19% year over year beat. Um, iPhone revenue was up 23% to 85.3 billion, which is the highest ever recorded for a single product category. Um, Apple numbers look good. Cash generation and return, 53.9 in operating cash flow. I would probably say that the thing that hurt the stock is Apple still has zero AI strategy that we know of at this point. We don't know what
That
their
we
AI
know of.
what
Yeah.
their AI strategy is, and I think everybody was kind of anticipating um, what that would happen with that, but it says we don't know how they're how they're going to monetize AI. They think that some partnership with Google might be, you know, a way to do that. I don't know why they don't go out and go buy like Perplexity or something. Like just go buy something and just
They
call it a
have the
day.
money. That's the thing. They have the money.
They got the money.
Like I don't.
So I don't know. I think either they're being too conservative. I don't know. I to be honest with you, I don't know what it is. But, good numbers in my opinion. But again, when I look at Apple, I just don't know. I don't see it as a long-term growth story anymore. So until they figure that part out, if you ask me who I'd like to own right now out of the Mag 7, I still think Google is the best name to own in that space. So, but yeah, that's it for the earnings reports,
Absolutely.
man. I mean, those are some, the big ones that I wanted to cover today. There were some other ones out there, but I think those three were the big ones because of they all basically affect the whole AI build out moving forward.
Hmm. Hmm. And I mean, we keep talking about like the whole AI build out. SanDisk plays a huge role in that, when it comes to like storing data and all these different things. Now, they do sell to consumers also as well as businesses, but I can tell you this move they're having right now is not based on consumer spending. It's more like big business actually buying
Correct.
memory
Yeah.
storage and all these different things. So
That's crazy. I didn't think of memory storage as an AI play. It never hit me.
it just became one. It
I
just
never
became one.
it
To
never
the whole
dawned
thing
on
that's
me.
happening.
I'm thinking networking,
Yeah.
I'm thinking chips, I'm
Right,
thinking
right.
cooling, and I'm
All
like
the
I
big
didn't
stuff.
all the big stuff, but memory didn't even scratch the surface of that. But
Yep.
that just keeps telling you that, there's just so many pieces to the puzzle that you can really find opportunities if you know where to look and you dig deep. And I just completely
Yep.
missed this one.
Hey, and if you know somebody who works at SanDisk, tell them to hit us up because we wanna talk to them about what exactly they got going on over there. Because
I
ain't no
remember
way, man. This
I remember back in the day, I actually went down there to see if I could manage their 401k, but I never was able to get a hold of any of their HR people because
man,
they're out here in Silicon Valley.
you
But
might
this
want to
was
try again.
but this is when they were part of
WDC.
WDC. Yeah.
Yep,
So
yep, yep.
maybe I was talking to the wrong person.
Yeah, probably. But overall, man, like earnings wasn't bad. I think it's just I think especially with Apple, like I know we've been talking to Apple for a while. Like they have to figure out all the other big companies are telling us we are going heavy into AI, except for Apple. Apple hasn't figured it out. I don't know if they're playing like safely and not telling us what's happening. Maybe something else is going on with them, but we haven't got any play for them yet to see exactly what they're going to do with when it comes to AI and all this stuff. So
Yeah, it sounds
we'll
like
keep an
they
eye on them.
yeah, it sounds like they're just playing it real safe because it seemed they just keep betting on iPhone. One of the things that I did see is the services business is now a 30 billion revenue business,
Wow.
which I think is impressive. So I'll continue to watch that, but I don't know. Just I don't see them growing as an enterprise without any like major acquisition because, like I said, I don't know what their AI play is, and we'll just have to keep waiting until we see something concrete because everything they mentioned has kind of been a miss.
Right.
Yeah. So
Right. And it's crazy. If you guys think about like service businesses, that would be like the App Store, the Apple Music, and then they introduce like Apple TV Plus. You have the iCloud. You know what? iCloud might actually be taken off.
Yeah,
You know what I mean? Like,
I
especially with the
subscribe to
storage and all
iCloud.
these
Yeah,
different things.
I subscribe to iCloud. Yeah. So
That might
I,
be taken off also because it's like they manage storage and stuff. So, that might be something to look into.
mhm. I
So
also
that'll
I
be
also
interesting, man.
I also heard too that the cost of building the phone because of the memory increase in cost
Hmm.
might hit their bottom line because memory is costing them more money or could cost them more money that could also possibly hit their bottom line. I think they finished in the green today, but the stock
Interesting.
was down like 1% at one point. So we'll see where it goes from here, but they are off of their all-time high, which is what's the all-time high for Apple? 288. So they
Yeah.
bounced right around that 200. I think it's the EMA. Yeah, 200 EMA where they found support not too long ago. So we'll see from a technical standpoint if this is where the stock starts to pick up. But it has
Yeah.
been on a downtrend since that 288 level. I mean, it's been consistently down from 288 to about 244, and now it's kind of found it's consolidating around this 255, 257 area. So we'll see what happens.
Yeah, and I think investors are starting to figure out exactly what they're doing. So, yeah, that's about it. But let's move on to the new Fed chair, and let's talk about what the effect was on the market. If you guys are not familiar with who the new Fed chair is, go look it up. I mean, I was reading somewhere that maybe now the Federal Reserve is going to move away from data-driven rate control to economic conditions. I don't know what the hell
Hmm.
that means, but instead of like focusing, Jerome is very focused on data. Let's look at the data. Where's the data telling us where we're going? Also, he's heavily focused on that. But with this guy, Kevin Warsh, who's 55, he's a veteran of central bank and former Fed governor in 2006 to 2011. He also previously played a key role during the 2008 financial crisis and now serves in academia and think tank roles. So, I mean, what did he do during that 2008 crash? Like, was he helpful? Did he figure out how to make things work? I don't know. But we're about to see exactly. And of course, Jerome's still going to be around till what, June, I think?
I think Jerome has an opportunity to still play a role on the board if he chooses to. I
Hmm.
don't, people are saying that he may not. So we'll have
I
to
don't think
see.
he's going to.
I will say that from a qualification standpoint, Kevin Warsh is well qualified. I will say that he's got experience working with the Fed, and he, he's well respected by other Fed, central banks throughout the world. So
Like
he's got
governors.
the experience. Yeah. So
Hmm.
I give him a lot of credit as far as that concern. Now, I'll also mention that the Fed chair doesn't make all the decisions on rate cuts or rate hikes.
Right.
There is a committee that has to come together and make a decision. So it's not like he's all of a sudden just going to do what the heck he wants. No, but can he convince the board to take a different perspective when it comes to cutting rates and not cutting rates? Possibly. So we'll just have to see if they become, as you mentioned, less data driven and more what are the economic conditions, right? And if that changes how fast or how soon
Hmm.
they can,
Hmm.
move around and change rates. But yeah, we'll see. He's been appointed. It'll be real interesting to see how his deposition goes in front of Congress. But I will say that from a qualification standpoint, he is one of the more qualified people that was selected for the role. So good for him.
Yep. Yep. But so was it a coincidence that we also saw silver and gold kind of sell off like crazy starting from yesterday and then today just kind of like continue to even go lower? Is that coincidence or do you think those two things kind of correlate?
Yeah, it could be correlation. I've heard that people felt that Fed independence is in good shape moving forward. So what some people were saying was if someone got in that might have been able to have been manipulated by the president, then monetary policy might get too loose. We might see higher inflation. Money might get too cheap. Therefore, people were buying gold and silver. That's one theory. Now, people feel that Kevin Warsh
Mhm.
is someone who may not have been, who will not be as influenced by President Trump. They're like, okay, well, the Fed independence still looks like it's intact. We don't need to be overly cautious about building up hedges in silver and gold, and that's why it sold off today. I'll also say there's probably a lot of leverage and a lot of hedge funds chasing the trade that probably just wanted to sell out and de-risk. So we saw GLD was
Mhm.
down what,
Mhm.
10%. We saw SLV down 28%. So that was a crazy move. I didn't expect that. I think it went down because I woke up with the thought of getting into silver and it sold off. So I kind of might have been a bad omen for the trade.
It's your fault.
It's my fault. I jinxed it. So, but yeah, SLB down 28% in one day. That's. I mean, we went from what 90, what 109 to 75 overnight. Like,
Overnight.
so we'll see if the buying picks up, if it's just profit taking. Um,
Yeah.
like I said, I'm not a commodity expert. This is not something that I am familiar with, but we'll see if stuff starts to pick up. But it did hit a key level at 75.42. If it loses that level and it's kind of sitting right on that level, if it starts to trade below
Hmm.
72.90, then I think this one has more potential to go down. So we'll just have to wait and see. But if you had puts on SLV, well, you probably made a lot of money.
Yeah, you woke up happy today. Even gold hit like a low of what 46, I think like 46 something, 46.90 around there. And it kind of bounced back a little bit. But man, that was a heck of a drop, man. Like, yeah, that was a big drop. So if you caught that, you definitely made some good money.
I will say that from a technical standpoint, when I'm looking at the three indexes, I think today might have been one of the few days that we're starting to see early signs of buyer exhaustion. So I don't know
Hmm.
if you look at SPY and you look at SPY between yesterday and today in the pre-market, you can kind of see that it on the hourly chart. You can see that it's clustered around this 200 and 400 SMA. And it's if
Hmm.
you've been trading SPY over the last couple of days, it's just a nasty chart right now. And I think
Right, right.
we're starting to lose that level and the momentum is starting to weaken. I'm also looking at QQQ. Same thing with QQQ. QQQ QQQ is looking really, I wouldn't say bearish, but let me go back to the hourly chart. Yeah, we broke through the 200 and 400 SMA for the second time in the last 2 days, and we've lost that level. So I'm wondering if we start to trade lower. And IWM is another one that traded right through, got rejected at the 200 or the 400 today, and it's starting to show momentum to the downside. So these are the first signs of buyer exhaustion that I've seen on all three of the indexes this year. So we could see some profit taken. We'll see what happens, but we still got some big names to report next week. I think Google and Amazon are still going to report next week as well. So that's just something to also watch from a technical standpoint. So, and then also we got PPI today.
Yes. So let's talk about PPI, man. It came a lot hotter than what a lot of people thinking. So the monthly, what did it come above 2%? I think it came like plus 0.5% or something like that. Above the 0.2% consensus estimate and higher than November's. November was again a lot lower. This suggested a stronger than expected wholesale price, right? So there's definitely a little bit of pressure going on right now. Core PPI also rose by 0.7%. So again, we seen the numbers that are kind of starting to creep up a lot higher now. So did that also contribute to some of those selling that happened today? You know?
I think so. I think so because people, some analysts are saying that The folks that have been either eating the tariffs or getting creative about how to not pass it to the consumer, they can't keep it up forever. At some point, it's going to give way. And with the producer index showing signs of ticking higher, the question becomes at what point does it start passing down to the consumer? Some people think it's inevitable. We don't know when it'll happen, but it will happen at some point. So that's something to watch. And if we get a new Fed chair, we have to understand what are his policies going to be when it comes to maybe CPI getting a little bit hotter or with PPI getting a little hotter. So um, the Fed held this week. I don't think that you have the green light to start cutting again yet. So um, PPI being hotter to me is not a good thing in general. If it stays here and doesn't move, okay. But if it starts to creep higher, I feel that it's only a matter of time before it starts showing up in CPI. So we'll just, and that's not going to be good for the markets because again, the one thing you never want to do is start a rate cutting cycle and then go in the opposite direction at some point. That just never really works out well. So Fed wants to avoid that at all costs.
But I mean, if you think about it, like just look at the conditions out there today. If you're talking about food, if you're talking about shelter, if you're talking about the day-to-day consumer stuff, I feel like that's already being passed down to consumers. I mean, you might not notice it just yet, depending on what your level of income is, but I think that is happening today. That price is being passed down to consumers today. So, like I say, when will the majority of businesses start doing that? You never know, but the pressure is definitely building on the consumer side of things now. Because like while I said, businesses has been being creative, like maybe cutting costs here, cutting costs there, trying to figure out how to like not pass that down to the consumers. But eventually it's gonna happen. So let's see how much pressure they get and before they fall apart and be like, okay, we can't handle this anymore. We got to send it over to consumers now.
Yeah. So yeah, that is a story to me that even though we've seen President Trump say, "Oh, inflation is under control" or "inflation is dead," blah blah blah, I don't buy that narrative at all. I still feel that it's something to be mindful of because, again, the moment companies are like, you know what, I think we've eaten this enough. We're getting creative. We need to pass these on to the consumer, or if it shows up in CPI, that to me is not going to be good for markets. So, and people are still getting laid off. I think what Amazon is laying off, 16,000 people. I think Pinterest is laying off 11% of their workforce.
Yep.
So
Yep. A lot of people are getting laid off.
yeah, so we'll also start to see what shows up in the unemployment data. I think we
Yep.
could hover around 4.4 to 4.6 for the rest of the year. We start getting to 4.7, 4.8, that's not going to be good. So
Mm-mm. Mm-mm.
something to be mindful of because the thing that the Fed has had to deal with is you can't have decreasing you can't have increasing unemployment and you're like, okay, we need to cut rates to stimulate the economy. And at the same time, you have increasing inflation.
Mm.
Like that meant that is a serious catch 22 when you get into that situation. And that's kind of where the Fed has been operating as of lately. Fortunately, inflation has not really been ugly. It's kind of
Right.
calming down. It's kind of found a home, I would say. But if it starts to move higher, and unemployment is going up, that's a bad place to be. So that is something that we just have to
Hmm.
be mindful of and watch for over the next couple of months. So I think that data is going to be very, very important moving forward.
Right, right. But so far, again, we've been seeing it's been very selective, right? It's not like overall all companies are doing mass layoff. It's more like the tech industry is doing layoff, maybe some service industry is doing layoff, but it's like it hasn't been like a mass layoff across all the different companies.
Correct. Yeah. So, but yeah, I think this was a jam-packed week. We've kind of got through the week. Market got through the week. I would say nothing aside from silver being down 20%. Nothing really. catastrophic in my opinion. Now, Microsoft was down big. I will say that. Um, Software is getting a bad rep right now. A lot of software companies are getting absolutely destroyed. My word of advice to you as an investor is go out there and start researching some of these companies that are 30 or 40% off their highs and see, are these good businesses to buy? Now, I will say this, they're probably still good businesses, but what is a good price to possibly make a good entry and hold these stocks long term? So I've already told you in the software space, I like the cybersecurity companies because again, they're not selling any sort of feel good type of business. That's a need business. You need cybersecurity. So, and I think that that's probably why names like CrowdStrike haven't really got hit too hard compared to your ServiceNows or your CRMs, right? So,
Right, right,
yeah, I would make that a homework project that some of these companies will emerge from this downfall. You just need to be aware of which ones those are going to be.
right. And it's definitely going to help, to be, in the forefront of things before they start getting, expensive for you to buy a stock and all those different things. Now, a lot of the stories that we talked about is still intact. We talked about power, we talked about all these different things, storage and all that. All of those still intact. Nothing has changed fundamentally when it comes to like need for the businesses. So again, just keep that in mind also. Um, Next week, there's not a lot of that's coming out. We have a deployment coming up. We have openings, the Jolt, I think they call it the Jolt reports or something like that on Thursday, February 3rd. We have the ADP employment numbers is coming out on Wednesday at 8:15 a.m. Of course, we have the initially jobless claim 8:30 February 5th. And then we have the unemployment rate, consumer sentiment, consumer credit, all that's coming on Friday. So again, not a lot of big hit numbers coming next week. Those are also important in terms of like the job reports and all this stuff to just see where we are when it comes to jobs and stuff.
Gotcha. Yep. We got Google earnings on the 4th, Amazon earnings on the 5th. So
Yep. Those are
those
two big boys. We'll see.
those big boys
Um,
gotta deliver.
Yeah. But with that being said, man, I mean, like you said, the market hasn't really, I mean, we've seen some good numbers from earnings and stuff this week. We've seen some, downtrend move going to end this week. But other than that, I mean, there wasn't like really crazy news that came out of the left-hand side for us, for the market to be shaken up and stuff. So I'll say be cautiously optimistic when it comes to this market at this point right now. But overall, like just short term, we might see some, profit taking, and then once the market kind of calm down, absorb some of those news, we might see some stock moving a little bit higher again. But other than that, man, you got any other advice, any other suggestions going into next week, how to deal with like the first week of February?
Now, I'm looking at bond spreads, and I don't see us in any area of caution yet. So everything looks good in that realm. And I look at the VIX. The VIX was slightly up today, but we're below 20. So
Right.
we what was the peak for this week? Let me go back. The peak for this week was 1974 on the VIX, or was that, let's see. Yeah, 1974 on the VIX was the high for the week. So, you know,
Mhm.
nothing if we were hovering above 20, 30, I'd be, a little bit nervous. But we'll see. I did see some put activity though, some large puts being put in play, and I did also see a $2 million VIX order. So
Mm.
I don't know if people are buying insurance or being a little bit cautious. I do not know for sure, but something to be mindful of next week. Now, I will say this, if Google misses and Google sells off next week, then that's not going to be good. So
We're
I think,
gone.
yeah, that's definitely something to watch. Because if you look at what happened with the market when Microsoft sold off, I mean, yesterday, whoo, that was a nasty sell-off.
Ugly.
That was a
It was ugly.
nasty
Yep.
sell-off.
Yep.
And if you were in our trading group, you probably made I think we had one trader yesterday. Let me see. What did he make on his IWM trade? Probably in and out in less than an hour. Yeah, 173%. I hit SPY and I hit IWM. So those are some really profitable trades yesterday.
Big
And
moves.
yeah, so I will say that if Google does not deliver, you could see another day where the market does sell off. So just be mindful of that.
Yep. Well, with that being said, again, I apologize for the delay to the technical difficulties, but we are able to make it happen for you all. But we're gonna go ahead and get wrapped up. But again, market is still adjusting to inflation data. We just got a new federal leadership news. I guess, he's not gonna start until a few more months. But I mean, we got new news on that. The selective layoffs happening. I mean, we might see some recalibration of prices in the market, but other than that, I mean, as always, just stay sharp, man, and pay attention to where the direction of the market is going, and um, don't get clapped, basically, being late in the game and all that stuff. That's all I can say. You know what I mean? So if just follow where the trend of the market is going. If you're a day trader, this is heaven, man. Like you're gonna make a lot of money. If you're a swing trader, you might want to wait for a little bit, let
Correct.
consolidation happen, and then start buying your swings again. So
Yeah,
again, just be patient in this market.
correct.
All right. With that being said, y'all have a good weekend. Stay safe out there. We'll be back on Wednesday with more Wall Street rundown. With that being said, man, y'all have a good night. Wale, enjoy your weekend, man.
All
Hope you
right,
don't do nothing
everyone.
crazy.
Yeah, I will not. Have a good weekend, everyone.